I'm Tammy Fitchett, your Silicon Valley real estate reporter, and today we're going to talk about an article that I found to be very helpful for our buyers on MSN.com. I'll provide the link in the box below. And the article is 5 steps to take before shopping for your first home. You know, it's always advantageous to make sure that your ducks are in a row before you go decide that you want to purchase a home. So this way you know exactly what you can do, where you are, and how much you can spend. So the first thing we're going to go over is to calculate what you can comfortably spend. Being mindful that if your income is about $50,000, you could reasonably afford $1,100 per month in mortgage if you stick to the 28% debt to income rule. The second thing we're going to talk about is to save a down payment of at least 20%. Why do we say 20% instead of 5% or 10% when there are lending products out there that will ask for a lower down payment? The reason we ask for 20% is because you can avoid paying private mortgage insurance, which can tack on extra hundreds of dollars to your mortgage unnecessarily. And the private mortgage insurance would have to stay on the mortgage you pay every month till you got at least 78% of the loan paid down. So that's a lot of money if you add it up over time that you would essentially be giving away instead of saving and putting that money toward the principal of the house, the down payment of the house. The third thing we're going to go over is having an emergency fund of at least 3 to 6 months. Why do we say this? As we know, in this day and age, anything can happen. When you become a homeowner, you inherit any issues with the home. When you have an issue with the home, let's say the water heater breaks, or you have a pipe break. It's not like when you rent, you can go call your landlord and he has to come and fix it and hire someone to fix it. When you are a homeowner, this becomes your responsibility and you want to make sure that you have enough there to fix it. So that way you don't have to put anything on credit, and you want to be able to prepare for just in case you lose your job or you get sick. You know, you don't have that extra stress and worry of how am I going to pay this mortgage that you've just now taken on. Okay, the fourth thing that you need to do is to get pre-approved for a mortgage. This is so important because it lets you know financially exactly what you can and cannot do, what you can qualify for. You know, it always breaks my heart when I take buyers out and, you know, they've told me when they've gone through other agents, or you know, they were previously looking for a home, that they fell in love with a home and they weren't able to get it because they didn't know where they are. So generally what I do when I get buyers, the first thing I do is tell them they need to speak with the lender, because this will help them see exactly what they can look at. And I, as their representative, their buyer's agent, I will only show them homes within the realm of what they can afford. That way they don't get attached to something that's out of their means. And the fifth thing you want to do is find a buyer's agent. This is always advantageous as opposed to going to the listing agent of a house, because a buyer's agent has more of your needs in hand. You know, your needs in mind. They're going to look out for you. Not saying that the listing agent isn't going to look out for you, but the buyer's agent knows the market. It's their job to help you find a home so that you don't overpay for the home. And the seller's agent can definitely represent both of you. However, the seller does have a due diligence to the seller to make sure that they report to the seller everything about the house and whom they talk with. So you have to ask yourself, is this something that's advantageous for me? And sometimes it works out, and sometimes it's not always advantageous. So this is something you have to ask for yourself. So again, I'm going to run through them really quickly. The 5 steps to take before shopping for your first home. 1 is to calculate what you can spend. The second step is save a down payment or have saved a down payment of at least 20%. The third thing is to save an emergency fund of at least 3 to 6 months. And the fourth thing is to get pre-approved through a lender. And the fifth thing is to find a buyer's agent. So these are things to consider before you go out and purchase your first home. My contact information is in the link below. If you should have any questions, please don't hesitate to email me, text, let me know, or even comment below. Thank you, and I will talk to you in our next video.